Oh, I have to quit talking. Okay, good morning. We were just having a conversation about the video online. So, when I participated in classes as a student with Collaborate, I did that last semester for something I was doing, and I liked having the video because it made it, you could kind of see what's going on and see at least if you were missing anything. So that's why that's there. So I'm sorry to like train it over here, but you sit in the middle, that's your lot in life. Today what we're going to do is we are going to make good headway into Chapter 3. We started Chapter 3 last Thursday, so we're going to continue that today. We're going to finish Chapter 3 on Thursday this week. But what to do this week? This week's a little bit different. First of all, Attendance Quiz 10 is due Saturday, and it becomes available 5 o'clock Thursday or sooner. It will cover material from today, Thursday, and possibly last week, but they should be real basic questions. So you might need to refer to your notes from last Thursday as well, because the attendance quiz is over Chapter 3. Chapter 3 homework, that's in my accounting lab as usual. That's due Saturday. And then this coming Sunday, February 16th, there is no video quiz due. That is not a typo up there. Sunday, February 23rd is the next time we have something due in my accounting lab that's not an exam. So video quiz 11 covering Chapter 5 is due Sunday, February 23rd. You can do that any time between now and then. If you want to get it out of the way, you can. But that's Chapter 5, which is what we'll be covering after we come back from the exam. I'm going to start today, the rest of today, we're going to talk about tutoring briefly, and then we're going to talk about the exam again. I just want to make sure everyone has this common understanding since it is our first exam. But a plug for tutoring. We have tutoring today, Wednesday, and Thursday this week. It's the last time for tutoring before the exam. We do not have tutoring next week. There is a sign-up link in Blackboard for tutoring, and you can see announcements in Blackboard. And when I checked last night, there was still 1 or 2 openings for each time period at least. So there is room whenever you would want to go. I know there's a session starting at 12:30 today and a session starting at 1:30 today, and then tomorrow morning and then Thursday afternoon. Now we're going to talk about the exam again, and a lot of this will be a repeat of what we did last week, but I want to make sure that we all have this common understanding. Exam 1 is upcoming next week, so that's February 18th through February 20th. So Tuesday, Wednesday, Thursday, you can take the exam. The exam here I have starts at 9 a.m. on Tuesday. That's because that's the official Proctor open hours, but they will let you start taking it at 8 a.m. And it ends February 20th at 9 p.m. If you're taking it in the College of Business Computer Lab, if you're in sections 1 or 2, you have to start it before 8 p.m. Okay, on any day. If you go to take the exam on Tuesday or Wednesday, they will not let you start an exam after 8 p.m. So sections 1 and 2, you take it in the College of Business Computer Lab, the 2nd floor. You would have received an email from me yesterday, I believe. Yes, that makes sense. I was thinking, I think that was yesterday that I sent that. Yes. So you received an email. If you're in sections 1 or 2, you got an email stating you're taking it in the College of Business Computer Lab. The advice I have for you is I have about 400 students. I have about 400 students taking the exam in the computer lab, and there's 72 computers at most available. So if you think about it, if you all wait till Thursday afternoon to take the exam, there's going to be lines. Then if you're in sections 5 or 6, I emailed you yesterday, say you would have gotten an email that said the exam, you're taking your exam online through ProctorU. That email that you received yesterday, and this is addressing the question from Sarah, check your email, check your spam folder if you didn't see it, but I did send an email yesterday explaining about the ProctorU exam and giving you some links. It's also on Blackboard in the left-hand navigation menu. There is an item that says exam info. If you click on that, then it will bring up exam information. Okay, so there's basic information. Scheduling an exam. If you're in sections 1 or 2, there is no scheduling. You wait in line. So I guess that's the downside. If you take your exam Tuesday or Wednesday, historically there won't be a line. That doesn't guarantee there will be no line, but if it's anything like last semester, we had exams over 3 days. I would say 5% of the people took it the first day. We picked up 10, 15% on day 2, leaving 80% for day 3. So it does potentially get long lines starting 1 o'clock or so on Thursday into the evening, and you do take a risk of not being able to take it. So if you're going to take it in a computer lab, if you're in sections 1 or 2, don't wait till Thursday. Because, I had a student this morning, I felt bad for him, but this could happen to you, and then you don't have any other options. His car died in the drive-thru of a fast food restaurant. And how awful would that be? But anyway, so he was late and missed something he had going on. And so you don't want, these things happen when you're under stress for an exam. You'll have something happen. Don't let that be you. Take the exam on Tuesday or Wednesday. Then you have this extra cushion day. So if something happens, you have a fallback plan. ProctorU, if you're in sections 5 or 6, you have to make your appointment at least 72 hours in advance. If you look at the email that I sent yesterday or look at the exam info on Blackboard, if you're in sections 5 or 6, you can go to the ProctorU website. You can schedule on their website. You have to create an account, I believe, and you schedule with them. And there's also a phone number you can call if you would prefer to talk to someone. It's not negotiable which option you do. If you're in sections 1 or 2, your exam can only be taken in the computer lab. If you're in sections 5 or 6, you can only take it in ProctorU. Your exam will not work in the other place. And again, see Blackboard exam info in the left-hand navigation menu for complete details about the exam. I'm hitting the high points now, but not everything, so at least have to look over things. Another thing just to stress, one piece of paper. Today we're going to go through an exercise or 2 that should be on your piece of paper, at least journal entries from it. Your piece of paper, 8.5 by 11 piece of paper, 1 sheet of paper. You cannot tape 2 pieces together. You cannot staple 2 pieces. You cannot use one side each of 2 pieces. It is 1 sheet of paper. You can, as long as it's readable by the human eye, you can write on it, you can type on it, you can use any color of ink. It doesn't matter. These are all questions I've gotten in the past, so that's why I'm saying all of these things, that's fine, but 1 physical piece of paper. The lab has scrap paper. The lab has scratch paper. If you're taking it with ProctorU, you can use blank paper for scratch paper. You'll have to show them that. Okay. Calculator, if you're in the lab, they'll provide one for you to use. If you're taking it on ProctorU, you can only use a simple calculator, not a programmable one, and not a cell phone. So you can't use a TI-83 or anything like that. Remember, no phone is visible ever under either method. I don't care if you're pulling your phone out to check for a text message from your mom. It doesn't matter what it is. If your phone is visible, that's a 0 on the exam. So you want to make sure it's not visible and make sure that it is turned off so it's silent, because you don't want it humming. And because then what happens is it starts vibrating, then you get it all out to silence it, and then your phone's visible. So put the phone away before you get in there, and you cannot use it for a calculator. You cannot use a calculator on your computer. You have to use a simple calculator. You're not going to be able to have any other windows open other than the exam. Okay, the exam content. It is a mixture of multiple choice and exercises. How many of each is covered in exam info and Blackboard? So under exam info, if you get the sheet about the exam, it'll tell you exactly how many questions. On average, students take about 45 minutes to an hour to take this first exam. The best way to prepare for the exam. So let's assume that you have done all the homework to date, all the quizzes, you have been to class or watched class from the beginning, you have read the chapters. Your very best way to study then is using Study Plan. Now Study Plan is in my accounting lab, and let me emphasize again what it is. So you have homework problems, and I don't know how many homework problems you've had over chapters 1, 2, 3, and 4, but let's just say for the sake of argument you've had 20 homework problems. And you can absolutely review those problems by going into My Accounting Lab, clicking on Results, and then clicking on the hyperlinks. That is not how I recommend studying though. That usually doesn't help you very much. What I've done is I have taken those homework problems and narrowed them down further. So let's say there were 20 problems on the homework. Maybe in Study Plan, I've put 12 of those in Study Plan. So anything I'm trying to narrow the focus so you don't have as much to do for the exam preparation. So I've taken maybe 12 of the homework problems and put them in Study Plan. And again, I'm making up these numbers, I don't know. But I know I took the whole population of homework and I took some of those and put those on Study Plan. So then when I made the exam, what I did is I took the population from Study Plan and I took some of those exercises and put them on the exam. So the exercises that are on your exam are coming from Study Plan. They are in Study Plan. Accounting is not the kind of thing that you can just look over a problem and go, oh yeah, that makes sense. Because it does make sense when you look at it, but when you try to do it, that's when you get tripped up. I would work through Study Plan over and over until I could do a homework problem right without the Help Me Solve This button. Looking at a problem you did a week or two ago and going, oh yeah, I know how I did that, isn't probably the best preparation. Study Plan has the exercises that will be on your exam. If you can't do an exercise in Study Plan, Murphy's Law says that's going to be the one that you get on your exam. Okay? So you need to go through those exercises in Study Plan. Practice them until you can do them. Now, you can do the problems in Study Plan as many times as you want. You can do them over and over and over. I did put a little video up on Blackboard and a handout, either one, a PDF or a video, whichever one you want, about how to get into Study Plan so you have everything there. There is no limit on how many times you can do problems in Study Plan. You can practice them as many times as you want to. So Study Plan is there, so it has exercises. The other thing in Study Plan are multiple choice questions. Those start with a Q or a QC, and some of those multiple choice questions will show up on your exam as well. They're also good practice because you can get a feel for how well you know the material. After the exam is over, sometime in the next, I'd say in the 3 or 4 day period after the exam, I will publish a list of scores without names, of course, but you'll see all the scores sorted from top to bottom. Typically on this first exam, this is the easiest exam in this class, which is not saying it's easy. So I don't want to lull anybody into thinking, oh, this is really easy, because it isn't. The exam scores on this exam, I'm predicting, will range from a low of 20% up to 100%. There will be several people who get 100% or very close to it, but then there will be lots of people at the other end as well. Last semester, what I did is I took the top 20 scores out of 500 or 600 students, and I talked to each one of them and asked how they prepared for the exam. And over 90% of them said, I think only one person said they didn't use Study Plan, but the rest of them used Study Plan, and I would say the average hours in Study Plan was probably in the neighborhood of 8 to 12 total, because it counts your time from the beginning of the semester. So you You can practice. You should start it now. You should not wait until the night before. Invariably, I have seldom heard from anyone who has started studying the day before and come in and done a great job. It's a steady, slow and steady effort. It requires lots of practice. I don't mean to scare you, but it is something to be concerned about. Don't treat it too lightly. So many times after the exam, half of the class will not touch study plan for exam 1. Okay? Their study plan doesn't directly affect your grade. It's not like you get a grade for study plan or points for it or anything, but study plan is in my accounting lab. It's a button. Sorry, I just saw that. So study plan doesn't impact your grade in terms of you don't get a grade for how much you do, but study plan is, I would say, what I hear from people, I'll do the same speech every semester, and when I ask people why you didn't use study plan, usually they'll say, well, I thought I knew it. Okay, and study plan is a great tool to use because it absolutely has exam content in it. And if you can get into study plan and you can zip through it and you know everything, great, you're probably in pretty good shape. But if you get into study plan and you have to struggle your way through, don't go through it one time, struggle your way through and go, oh, okay, I guess I need to study more, and never go back to it. You need to go back to it. You need to be able to work through those exercises without the help me solve this button. What I would do, if it were me, is I would make my review sheet based on things that we've had in class, and then I would try study plan. I would add to my study sheet, my review sheet, what I needed as I went through study plan, and then I would try study plan again and again and again. It's just reviewing these problems is not going to help you. You're going to need to actually practice them. So I would love for this average on this exam to be way higher than I anticipate. Typically the average turns out to be around 70%. But keep in mind, I've got a whole bunch of people up at the 100 range or 99 or 98, and I can definitely see what's happening here. I can go into study plan and see the time that's put in, and it's not just time. So don't go into study plan, press the button, and think by leaving it open you're going to magically get it. It's actually time working through the problems and getting them right, working through them until you get it right. Okay. Okay, back to exam things. Any rule violations, I am bound by policy, procedure, that if you have a cell phone showing or you use more than one sheet of paper or any other violation, you'll have a score of 0. You'll also be reported to the Office of Student Conduct. I have to report you. My next slide, you can see I'm emphasizing study plan, and basically if you're sitting here in front of me, you probably already know this, but study plan, to learn this material, you need to practice, practice, practice. You will see actual exam items in study plan. So that's kind of like a bonus for you too, that you know you're seeing stuff on the exam. My goal, if you work your way through study plan, if you can do study plan cold, so you go into study plan, you start a problem, you do it, you can work your way through all 4 chapters in study plan, you should be in pretty good shape for the exam. That's not a guarantee of 100% certainly, but that will get you very, very far. And then our review sheet. The review sheet is not to take the place of study plan. The review sheet contains the topics for the most part, of the multiple choice. Okay, and again, this review sheet is not on Blackboard. The only way you get it, if you copied it down last week, it's the same URL. So that review sheet is the topics from the conceptual questions, the multiple choice. But the exercises are going to count for about 50–75% of your exam, so you cannot ignore study plan. Do not wait to cram the day before the exam. This should be a steady effort. You should get, I sound like a mom, well, because I am, but you should get lots of sleep. What? Yeah, just You should get lots of sleep the night before the exam. Shorting your sleep doesn't do you any favors either. Yes. Questions from the attendance and video quizzes. I mean, they could be, but I mean, I'm not going to. The type of question I'm not going to ask you. Which business did I use as an example? So I'm not going to use those. Yeah, and that's what have you looked at the review sheet? Okay, the review sheet lists the topics of most all of the multiple choice, the conceptual. So that gives you kind of a population to study. Yeah, I mean, certainly you could see questions, so you could review past quizzes, but that's certainly not going to get you through everything, but yeah. Okay. Let's see, where are we going now? Oh, okay. At the end of class, we'll store up if you have any questions about the exam. At the end of class, I'll take questions. I also have time built into the schedule on Thursday to talk about the exam again and take any questions. Okay. So today we have a couple homework problems, and these are both really good illustrative problems of what's going on in this chapter. Exercise 313, we have Dove Company prepaid 3 years rent on January 1st, 2012. We get in our mind when this happened. This happened at the very beginning of their year, 2012. They paid $18,000 for 3 years rent. So how much a year rent are they paying? On the spot here. Yeah, 18 divided by 3, exactly. So $6,000 a year. So yes, they're paying $6,000 a year, but they're paying it all on January 1st for 2012, for 2013, and 2014. Now it's December 31st, 2012, and they prepared a trial balance and make adjusting entries. And now we have to answer these questions. And this is a good exercise for thinking about what happens. When they originally when they paid the 3 years of prepaid rent, this is not part of the exercise. They're not asking you this, but I'm telling you this because then the rest of it makes a little more sense. When they prepaid 3 years rent, so maybe their landlord gives them a discount for paying in advance. So when they paid that rent back on January 1st, 2012, they would have debited prepaid rent and credited cash. Okay, because they have this asset. Prepaid rent is an asset. It has future economic value to them. So they would have debited prepaid rent. They would have credited cash. So that's back January 1. Now, a trial balance is prepared for one reason only, and it's to make sure your debits equal your credits. So when it says, so A, what amount appears for prepaid rent? So prepaid rent, you probably want to make a note, prepaid rent is an asset. So what amount appears on their unadjusted trial balance? So before they do any adjusting entry at the end of 2012, what amount is on their trial balance, unadjusted trial balance? Well, it's that $18,000 that they originally paid would be on there because they haven't made any adjusting entry. So the answer for A is $18,000. They have not made any adjustment yet because it's asking us the unadjusted trial balance. So that's before we make any kind of adjustment. At the bottom there, I put how we calculate how much insurance expense a year we are paying. We paid it all up front, $18,000 divided by 3 years. Okay, next question down, B, Dove's adjusted trial balance at December 31st. This says after the entry. So what we're saying here is now we make the adjusting entry. The purpose of an adjusting entry is to adjust the accounts to reflect economic reality. Reality is at the end of December, they've used 1 year of rent. They bought this, they paid for 3 years rent on January 1st. It's now 12 months later. They have used 1 year of rent. So their prepaid asset, their asset called prepaid rent, should only have a balance of $12,000 because it only has 2 years left. So I could take the $6,000 times the 2 years left, so that's 2013 and 2014, or I could take the $18,000 I started with, subtract the $6,000 that I used up in 2012, and either way, I end up with $12,000 on my adjusted trial balance. A and B related to the asset called prepaid rent. So before we adjusted it, if we didn't make our adjusting entries, it would show $18,000 as the value of the rent that we paid ahead. But at the end of the year, we only actually have $12,000. So that's where we get this $18,000 and the $12,000 in A and B. So now in C, what amount appears for rent expense on their unadjusted trial balance? Without any adjustments, we have zero rent expense. Because that $18,000, if we don't make an adjusting entry, the $18,000 is going to sit on our balance sheet and it's never going to show up in rent expense. The adjusting entry is what moves this year's $6,000 out of prepaid rent into the rent expense. So after our adjusting entry, we're going to show $6,000 as our rent expense for this year. Next up, we have a short little exercise. This one has no numbers in it. We're just talking about, these are examples of accounting principles that apply here. We have 5 scenarios, and each scenario asks us which accounting principle or concept applies. Situation A, salary expense of $38,000 is accrued at the end of the period to measure income properly. Whenever you see expense being accrued, that's the expense recognition principle. We're going to see expense recognition principle appear above A. A is expense recognition principle. There we go. Situation B, March has been a particularly slow month and the business will have a net loss for the second quarter of the year. Management is considering not following its customary practice of reporting quarterly earnings to the public. This would not be acceptable. This would violate what we know as the time period concept. We want to make sure the time period concept says that we use the same length of reporting period every time, and basically we report at the same time. We don't adjust our reporting periods to play with our income. So the time period concept in entry B would dictate what needs to be done then. Well, they need to report. Now, situation C. A physician performs a surgical operation and bills the patient's insurance company. So let's say this physician does an appendectomy and bills the patient's insurance company. It may take 3 months to collect the cash from the insurance company. Should the physician record the revenue now or wait till cash is collected? Well, what dictated to us there what's the principle? The principle there is going to be the revenue principle, and the actual answer there is the physician should record the revenue when earned, which is now. You don't wait to get the cash to record the revenue. Situation D, a construction company is building a highway system and construction will take 4 years. When should the company record the revenue it earns? That also is governed by the revenue principle. What actually happens if we're spanning 4 years, we recognize some revenue each year. We are not doing multi-year revenue recognition in this class, but just know our revenue principle governs when we record the revenue. Revenue principle basically states we record revenue when we earn it. And then situation E, a utility bill is received on December 27th and will be paid next year. When should the company record utility expense? That's governed by the expense recognition principle. And the expense recognition principle says that we should record that utility bill on December 27th because we have the liability. If we receive a utility bill, we've already used those utilities. So we have a liability for it. We've used the expense. We've incurred the expense. Because we won't pay it till January, it doesn't have any impact on when we recognize it. Next up, we have a couple of questions. The first one's pretty lengthy to write, so I'm going to pause for a minute and let you write this question up. Write the question when it comes up, and then I'm going to go around and poll people, so you can use the poll feature. On December 15, 2012, a company receives an order from a customer for services to be performed on December 28th. Due to a backlog, the company does not perform the services until January 3rd. The customer pays for the services on January 6th. When does the company recognize the revenue? What do you think? What's the date? December 15th. Okay. What do you think? December 15th? Okay. What date do you think? January 6th. Okay. January 3rd. January 6th. The 3rd. Okay. 3rd. 6th. She's getting a wide variety of answers here. 3rd, 6th, 6th, pardon me, 15th, okay. 28th, okay. 3rd, okay. Brian, how many A's do you have? 3 A's. How many? So you have 3 December 15th. How many January 3rds? 27 January 3rds, okay. How many December 28th? 1. And how many January 6th? 26 of January 6th. I'm going to keep asking. What do you think? The 3rd? Think the 6th? The 3rd? 6th? 6th? 15th? 6th? 3rd? Yay, FYE. The answer is indeed the 3rd. Good job. Over here. Okay. And so the big principle to remember here on these is it is January 3rd. We recognize the revenue when we perform the service. When we get the cash. So what happens on January 3rd is we perform the service. So we are going to credit service revenue and debit accounts receivable. On January 6th, when the customer pays, we debit cash, credit accounts receivable. The revenue is recognized on January 3rd. Okay? We recognize revenue on the day that we perform the service. Now we have a shorter question coming up. The revenue principle requires that a business record revenue when the business does what? See? What do you think? See? This is boring, which is good. Okay. What do you? Mostly C's? Okay. And the answer is C. We recognize revenue when we deliver the goods or services. Next up is an exercise. This exercise is going to take the rest of class. This is a fairly lengthy exercise, but it's also very good. There's a lot of good stuff in here to put on that review sheet for the exam, the reference sheet for the exam. So this is a good one. And you'll also get to do it on your homework. So it's going to take us a while to get through here. A lot of this is, I'm going to do a lot of explanation on this, but you don't have to reason through everything every time like I'm going to reason through this first time through. So I'll tell you what you need to take away from this, what I would put on my sheet regarding this. And again, I know this is mostly unexplored territory. Starting with, it tells us an accountant made the following adjustments. So A through F are adjusting entries. And the reason that this is such a great exercise is we're going to look at 6 different adjusting entries, and these are great entries to put on your review sheet, these 6 that we do. So requirement 1 is journalize the adjusting entries. Requirement 2 is suppose the adjustments were not made. So we're going to start with requirement 1, which is to do the journal entries for A through F. So I'm going to get rid of the bottom where it says requirements, and we're going to do the entries. So we're going to start with A. And again, you don't have to reason through every one of these every time. I'm just going to give you some information. Prepaid insurance is an asset. Prepaid insurance is insurance that we paid before we use the insurance. So Progressive Insurance, if you buy car insurance from them, they'll give you a discount if you pay your insurance for a year or 6 months in advance. That's prepaid insurance. When you do that, you've got prepaid insurance. So what it's telling us in A is that prepaid insurance at the beginning of the year had a balance of $400. Payments for insurance during the period were $1,200, and prepaid insurance ending balance should be $700. Now if we take the beginning balance plus the payments, it doesn't equal prepaid insurance. What we're missing there, the missing piece there, is how much insurance expired or how much did we use. This is a nice generic formula for a lot of situations. We take our beginning balance plus any payments, plus the payments we made, more insurance that we bought, subtract what we used or what expired, and that'll give us the ending balance. When I approach a problem like this, the very first thing I do is write down something like this, the equation. So I write down beginning balance plus payments minus use equals ending. And all you're doing here is saying what I started with, I add the additional I bought, subtract what I used up, and that'll give me what I ended up with. There's 4 numbers in that equation. They gave us 3. So whatever 3 they give us, we can solve for the other one. So now I'm going to fill in the numbers that I know. My beginning balance of prepaid insurance is given to me as $400. My payments for insurance during the year were $1,200. And my ending balance of prepaid insurance was $700. So I'm given everything but the used. So I can fill in the numbers I'm given, and I can solve for used then, and I get used of $900. Beginning balance of $400 plus the payments, because payments we're adding in there because we bought more. So we start with what we started with, we add what we bought, we subtract what got used up or what expired, gives us our ending balance. So we can switch used to the other side, subtract $700 from the left side, we get used of $900. Another term for used when we talk about insurance is expired, because over time your insurance expires. Now, back to, we haven't done the entry yet. All we've done is the calculation. So when I have an adjusting entry for prepaid insurance, for insurance that expired, so if you're reading along and it asks about insurance expired, do the adjusting entry for expired insurance or used insurance or something like that, your entry is always going to look the same. You are always going to debit insurance expense. What? Did I go? Okay, I'm waiting for it. I got ahead. We are always going to debit insurance expense, credit that asset because we're reducing the asset, and in parentheses, that's not part of the journal entry. It's just to show you where the $900 came from. On that exam reference sheet, I would put this adjusting entry for insurance, prepaid insurance. This is an adjusting entry for prepaid insurance. You might be given, they might tell you, they might say your expired insurance is $900. Or alternatively, you might need to calculate it. But the entry is always going to be to debit insurance expense, credit prepaid insurance. You're increasing your expense, you're reducing your asset. You don't have as much prepaid insurance now, so you need to reduce that asset on your books. Okay, so that is definitely, I would put all 6 of these entries that we're doing on that reference sheet. So I'm going to quit harping on it. But know that these are entries I would put on my reference sheet. You're going to see them. I'm explaining them now, but you don't have to explain them. I know when I have a prepaid insurance adjusting entry, I'm always going to debit insurance expense and credit prepaid insurance virtually all the time. I can't think of too many times, or you wouldn't. So this is a really good generic journal entry to have. Next up, interest revenue accrued. This is a great one too. This is a nice generic one. To accrue interest revenue, what this is saying is the bank owes you $1,600 for interest revenue. You've had money in the bank, you're owed $1,600, you're going to get it at some future date, but you have earned it through the passage of time. So every time you see an interest revenue accrual entry or an interest revenue adjusting entry, you are always going to debit interest receivable and credit interest revenue. So what you're doing is you're setting up an asset to say, look, I have future economic benefit here. Somebody's going to pay me $1,600. And then I'm crediting interest revenue so I could increase revenue. Again, if you need to do an adjusting entry for interest revenue, this is your entry. Okay, next entry down, entry C. Unearned service revenue beginning 1100, unearned service revenue ending 500. Now I'm going to put some people on the spot. What kind of account is unearned service revenue? Anybody jumping at the bit to help her? Yes. Liability, yay! Liability, you were just, good job.
I knew that.
You knew that. You just were not confident in your ability. You should own it. But anyways, great job. Yeah, I had to ask like 12 people this morning for that one. So great. Unearned service revenue. Important when you see that word unearned, it is a liability. This account, what it's telling us here is our liability started at 1100. At the end of the period, the liability should be 500. How would we go from a liability of 1100 for unearned revenue down to 500? And that question is, the answer is that we earned it. We earned service revenue. So we are going to have this journal entry to recognize that we've earned service revenue. So we're going to be debiting unearned service revenue. We're reducing the liability. And again, in parentheses, that's just showing you the calculation for the 600. It's the difference between the 1100 and the 500. And then we're crediting service revenue to increase revenue. But whenever you see that you're adjusting to recognize unearned service revenue as earned, this is your entry. Next one, depreciation. This one you're going to kind of have to go on faith at this point because we are going to talk much more about depreciation in a later chapter. But depreciation is one of the adjusting entries. In this particular example, they're just telling us how much depreciation is. Depreciation is how we spread the cost of a big asset over all the periods we're using it. Let me just use one example. We buy a building that we're going to use, and that building will last us for 30 years. We're going to use that building for 30 years. We spent $300,000 on the building, and so when we buy the building, the $300,000 that we spent on it, we have an asset. So we put it in the asset called building. But somewhere along the way, that $300,000 has to become expense because it's an expense of our building. But we don't want to subtract the building $300,000 in year one because that would put it all in year one when we're using it for 30 years. Alternatively, we don't want to wait till the end of 30 years and then put it there because then we'd have it there. So what we do instead is we take the $300,000 we spent for the building and, for example, divide it by 30, so we get $10,000 a year. So every year we'll have depreciation on the building. And that's what they've given us here. They've given us the depreciation figure. So we don't have to calculate it in this particular one. So the entry for depreciation will always be to debit depreciation expense, credit accumulated depreciation. Next to accumulated depreciation, you want to make note. Accumulated depreciation is what's known as a contra asset. Contra asset. It belongs with the assets, but it's a backward asset, meaning that it reduces its companion asset. Okay? So if we're talking about a building, this accumulated depreciation would always be shown with the building. Building would be the asset. Accumulated depreciation would be subtracted from the building to get the book value. We're going to see a lot more of that in future chapters. At this point, I just want you to know that accumulated depreciation is a contra asset, so it's backwards than all the other assets, but it does belong with the assets. And we're not going to get into calculations. That all comes up in a later chapter, but it's included here because depreciation is an adjusting entry. Next one down is entry E, employees' salaries owed for 3 days of a 5-day work week, weekly payroll $18,000. What's happening here is our financial period ends Wednesday night. So as of Wednesday night, we're right in the middle of a work week. So Wednesday night, we need to acknowledge that we have 3 days of salaries in this financial period, and then that we owe those 3 days. So what we're going to see with salaries expense in this situation is we're going to debit salaries expense because we have 3 days of expense. So 3 days out of 5 times the $18,000. And then our credit will be to set up a liability because as of Wednesday night, we owe employees for these 3 days. That's a liability and it's an expense. And then our final entry, income before income tax, $21,000. Income tax rate is 25%. What's happening here is companies at the end of the year, they know their income. Their income is going to be $21,000. Now they are not going to pay income tax on that until whenever their taxes are due. They do not submit taxes on the last day of the year. Just like us, I'm not going to pay my tax that's due till April. Companies have, depending on their tax year, a typical deadline would be March 15th. Depends how they're organized and all that. But they are not paying their tax on the last day of their financial year. So what they want to do is they want to recognize the income tax expense when they earn the revenue that tax is on. So what we're going to see here is $21,000 times 25% is the tax that they owe, and we're going to recognize income tax expense. So we'll debit income tax expense, and we'll credit income tax payable. Think of accumulated depreciation as belonging with the assets, but it's opposite. It acts as an offset. That's why it's called a contra asset. Think back to contra asset. Okay. I think of accumulated depreciation. It belongs with the assets. It's backwards from all the assets, so it acts as an offset. So you subtract it from the assets, but it always gets shown with its related asset. What we have just done is we have done the 6 adjusting entries. Those are excellent adjusting entries to have on that reference sheet to say when you have an income tax journal entry, there it is. You've got the accounts. Then you can figure your way through the amount. What I've got here, you've already got on your sheet. I just want to show you what I'm going to be using in a moment here. This is a list of all 6 entries that we just did because we just did requirement 1. Requirement 1 was to do all 6 adjusting entries. Now the next part of the problem asks us to figure out if we didn't do the adjusting entries, what would be the impact on income. What requirement 2 is saying is it a big deal to do adjusting entries or not? What if we skipped them? What would be the impact? So that's what we're doing now is requirement 2. Requirement 2 actually says, suppose those adjustments, those 6 adjustments, were not made. Compute the overall overstatement or understatement of net income as a result of the omission of these adjustments. So what happens if we don't make them? So what we're going to do is we're going to go to that list, and I'm going to look through, I'm going to break it up into revenues and expenses. So starting with revenues, I'm going to go through every entry and look for revenue accounts. So I'm going to start with entry A. We have insurance expense, which is an expense, and we have prepaid insurance, which is an asset. Neither one of those is a revenue, so I can ignore it. Entry B, interest receivable is an asset, so I can ignore it, but interest revenue is there, so I'll circle it. Same with C. So all I do is I just go down through the list and pick out every single revenue. So that's what I've done. I have $1,600 interest revenue in B, and I have $600 interest revenue in C. Now back to my debit credit handout that I have that's on the home page of Blackboard. We had it in class. I know that when I credit interest revenue, I'm increasing revenue. So the question is, what if we don't make these entries? What's the impact on income? Well, if I don't credit interest revenue for $1,600 and I don't credit service revenue for $600, I am understating income by $2,200. So I'm doing this as I'm chunking this answer up into pieces. So by not doing the adjusting entries, my income will be understated by $2,200. It'll be too low by $2,200 because of these interest revenues. So that's one thing. Now, I'm going to do the same question, and now I'm going to say, what is my expense? What expenses would I not recognize? So now I go on, and in red, I'm going to circle my expenses. So if I go through each entry and look for expenses, I see that insurance expense in entry A, depreciation expense in B or D, E, and F all have expense effects. Expenses increase with debits, which is what we have here. And if I add all of those up, so I add the 900, the 4,800, the 10,800, and the 5,250 up, I get 21,750. If I don't make these entries, my income will be too high because these expenses all reduce my income. So my income would be overstated by 21,750 if I did not make these entries. Every single adjusting entry will affect one expense account and one asset or liability. Look here, we have A, D, E, and F all have an expense, and the opposite side of each one of those is an asset or liability. And then if we look back at the revenue accounts, we had two accounts that had revenues, B and C, and the other side of those was one was an asset and one was a liability. So every adjusting entry will have an expense or revenue and an asset or a liability, one of each. Okay, now, so we said that expenses would cause, not doing these entries would cause income to be overstated by 21,750. So now on this next slide, what I've done is I've combined those last two. So we have revenues that would be understated by 2,200 for those two revenues I would not have made. Expenses would cause, not doing the expenses would cause net income to be overstated by 21,750. So the net effect of those two is 19,550. We would have net income be overstated. It is a big deal. These adjusting entries are huge. They're a big deal. We don't want to be going along during the month and thinking everything's going well and then boom, get hit with adjusting entries. Adjusting entries are always made at the end of the period, and they can be some pretty major expenses or revenues, just depending, but it does. So net income was too low in the revenue. If we didn't make the entries, net income would be too low by revenues. Net income would be too high by the effect of the expenses. So overall, our net income would be too high by 19,550 if we didn't do any of the adjusting entries. What? Oh. Now we have a definitional true-false question. A deferral is an adjustment for payment of an item or receipt of cash in advance. True or false? This would have been the reading or the videos. We had deferrals in this chapter and accruals. What do you guys think? True? False? We have a split here. Okay. I've got two trues and a false. What do you think? True? True? You changed your mind? Okay. What do you have?
You have what about?
No, I have about 100% true. No, I erased those.
There's
19 falses and 11 truths.
no.
Oh. Okay. Okay. Well, the answer is indeed true. So just know the definition of a deferral, the money changes hands ahead of time. In accrual, the money has not yet changed hands. Now I promised at the beginning that I would have time for questions about the exam, so I guess this is your time to ask questions. Before I look for questions, I do want to say something too. On Thursday, I have very little content. I have probably 2 homework problems maybe, very light Thursday, and I want to leave it that way because I want to talk about the exam. I want you to bring any questions you have. So I will be happy to answer questions Thursday. That said, we are done with the content for today. So does anyone have any questions now about the exam? Cricket? Oh, you have one. Good. Okay.
The stuff that we did today, like the ending part of what should be.
Yes, everything we're doing today and Thursday is on the exam. The exam's next week. So yes, chapters 1 through 4. We covered 4 last week, and now we're doing 3. So yes. Okay, anyone else? You have a chance on Thursday, so bring questions Thursday then. Okay.